Mike Tedeschi, Wealth Management Advisor at Perspective Wealth Planning. With this week's market breakdown video, we have a lot to cover here with the volatility after the U.S. elections. As always, if you like this content, please subscribe to our channel so you can see this on a weekly basis. At the end of the video, my contact information will be up there if you want to reach out to me. I'm happy to talk anything related to the markets with you guys. Now, I'm recording this Thursday morning, the 5th of November. And we still do not have an outcome to the presidential election, but subsequently the market thus far has not cared. It has rallied strongly after the U.S. election, even though it looks like we are going to get a hotly contested results. Multiple lawsuits have been filed by the Trump campaign, and the winner, again, still not clear at this point in time. So it may have surprised a lot of people to see the market subsequently rally into the uncertainty, but let's talk about this from a technical standpoint, and let's also take a look in this video of what that could mean for us moving forward. We're going to look at data sets from the day after the election, whether or not the market was up or down, and what that meant data set-wise over the next year. So let's jump right into it here. First off, again, I'm recording this before the market opens. Overnight, futures are up about 2%. Looks like we're going to open right at about that 3,500 level in on the S&P 500. When we take a look at it, we're still not back at those all-time highs. We're testing the underside of it right now, and really this market has been trapped, again, still between 3,600 and 3,200. So we are testing the underside of resistance. If we break out above, that would be extremely bullish. If we fail here, we're probably heading back down to that 3,200. So again, we haven't really accomplished anything since July. Market just trading up and down inside that range. When we take a look at the best performers after the election, it actually comes into tech, as also healthcare as well, which had a really strong day yesterday. The NASDAQ set to open up over 12,000. Again, kind of same thing can be said there. However, we've put in kind of higher lows along the way, so this is a little bit stronger of a chart. It's more of this pattern than a sideways range. We've talked about the leadership out of tech. We, of course, are going to be looking for that breakout to new all-time highs there. When we take a look at some of the losers, or underperformers, I should say, we definitely have to talk about the Dow still. We still have a series of lower highs. We are going to open up about 28,200, which is about right here today, but we're still well below that important 29,000 level, so we're going to continue to watch that. And again, we really have kind of traded in a range throughout the throughout the last couple of months here as well, but we've put in lower highs and lower lows, so you can see that like this, which is not necessarily a good sign. After the election, the regional banks actually did horrendous. They were down about 7.5% yesterday. That sector, that makes up about 20% of the Russell 2000, so underperformance there still. We do not have a new high. I will say, though, that when you look at this since June, we have a series of higher lows that are put in, and actually a series of higher highs that are put in, which gives you kind of an upward channel, but we still have a lot of overhead resistance that's in here, and it's been a massive underperformer for quite some time. Like I said, we have not had a new high in multiple years. It's not that we didn't make a new high this year. We didn't make a new high last year. It's actually, you had to go back a couple of years, which is the worst performing area sector-wise. For us. Now, what I want to take a look in next is I want to take a look at those data sets. I want to look at what happens for the S&P a year out when we have a rally after the presidential election. And you look at this data set, and this goes all the way back to the 1930s. It is very positive for the markets up to 6 months out, and a year later it's still positive 60% of the time. But these are really good indications that when you have that kind of push higher after the election, you oftentimes get that follow through. Vice versa, when you take a look at it, if we had a decline on the day of presidential election, the numbers are abysmal for a couple of weeks out, and a month, 2 months, 3 months out, and 6 months out, it's actually negative a higher percentage of the time than positive. But if you look a year out, it's actually 58% on the positive side. And if you remember what we just said on the other data set, it was 60%. So not a whole lot of difference a year out, but definitely a difference in the short term. We talk a lot about breadth readings with the push higher here over the last couple of days. We actually do have that crossover there on the NASI, and if we can see any sort of follow through here today, which looks like we're getting that gap up, we'll actually get back up over positive territory, which would put in higher lows on this, and breadth reading kind of turns back up, which would be a nice bullish signal. Now, when we come back in here and we take a look at some of the areas where we have some negative outcome, let's take a look at the U.S. dollar. That was a loser so far after the election. It had run up into the election but failed to get over the high that was put in at the end of September, beginning of October. Failed, so we have a series of lower highs still in play and still holding above this zone right here. So we're going to be watching this 92. Any more follow through here to the downside, that would be pretty bad for the U.S. dollar. And when we talk about the U.S. dollar, of course, we want to take a look at the emerging markets. The emerging markets are set to actually open up new 52-week highs above this zone right here. This is an area that we have talked about as important here for a while. And if we back this chart up and get a couple of years worth of data in here, this is a major zone. If we get back up above it, there's really a lot of clear sailing until about that 12,200 zone. China names were a big winner yesterday. A lot of big thrusts higher, especially out of China tech names. So that's an area that you're going to want to continue to watch here over the next couple of sessions. We see gold and silver starting to look like they could be winners from this so far because of that weak U.S. dollar. We held the major support zone that we had laid out here on the gold chart. If we look at this as a downtrend line, we're starting to get that break above. For me, I like to pay more attention to the horizontal levels. We're right at that resistance point. I'd like to see a close over 1940. I think that would continue our move higher if we subsequently got that. There's been a lot of months of digestion after this big push higher, held key zones, and is now starting to push back up. That is a good sign for the gold bulls. Silver, I'd like to see it get back up over about that 25.70 zone, call it 26 from a rounding standpoint, and move back up over here, and a close over that would be very good for silver. Take a look at copper, still holding over that key $3 level. And if we take a look in at oil, we talked about this last week, guys. We haven't moved the lines on this chart here since March. But here we are pulling right into a must-hold zone, and oil got that nice reversal and pushed back up. So we're still between that 34 and 41.50 heading back up. What happens up here at 41.50 is very important. If it fails again, we're really still trapped inside this range. Clear breakdown below 34, nice potential breakout above 41.50. So we're going to continue to watch that. We haven't talked about it a lot. Bitcoin put in the highest monthly close ever last month, continuing its continued move higher here. It's trading up around that 15,000 level, so you can see this is the important zone, making that breakout here and that push to the upside. So that is, of course, something to continue to pay attention to as well. We're still only a day or so out from the election. Lots of news can potentially come out here over the next couple of days as we figure out what's really going on with the race for the White House. As it stands right now, we took a look at those charts, all those key levels that we want to pay attention to. If we continue to get follow through, I would continue to pay very close attention to the emerging markets. I would take a look at China tech names, and again, gold, silver, potential breakdown of the U.S. dollar. All of those are certainly themes that we can continue to see play out here over the next couple of weeks, months. Of course, if we get some sort of headline shock and those charts turn around, we will, of course, cover that for you guys next week. As I said in the beginning of the video, if you guys want to reach out to me, you can give me a buzz at 814-580-9881 or shoot me an email to mtedeschi@perspectivewealthplanning.com. As always, I hope you guys find this content useful. I'll see you guys next week. Take care.